Iron ore futures this weekend jumped above $110 a tonne in Singapore for the first time since July. Now, this increase has helped all the big Aussie iron ore mining stocks on the market today, and it's also good news for the federal budget. Joining me now is resources analyst Michael Scantlebury from Euroz Hartleys. Michael, thanks for your time. Look, how have prices for iron ore been tracking recently?
Yeah, it really had a bounce off that $90 US a tonne level. So up, like you said, 10% over the weekend, and that was following a 10% rise last week. So yeah, trading the futures at $110 US a tonne at the moment. So tracking really well, and no real surprise to see the producers trading up this morning as well.
Yeah, what are some of the factors that have caused the price of iron ore to really start to gain traction again?
Yeah, it's quite simple actually. It's the monetary easing policies of the Chinese again. So we had that announced last week, and we've had the three of the largest Chinese cities announce that they'll follow through on those measures. So that's provided a further bounce this morning on that. So it's just around easing lending measures to Chinese borrowers and stimulating the housing market, which has obviously been very weak over the last decade or so in China.
Yeah, China's economy's obviously struggled quite a bit. Just give us a sense of how much Aussie iron ore ends up in China and what it's used for over there.
Yeah, so the vast majority of Australia's iron ore heads towards China. That's of no surprise to viewers, I assume. So it's obviously just broadly based into the steel market, and a lot of it is used in that domestic housing construction in China, along with a lot of finished good products as well. More recently, it has been exporting out to the rest of the world. However, we have seen some clamp down on Chinese steel dumping measures into India and other Southeast Asian countries as well.
What are you sort of expecting? Where are you expecting the price of iron ore to go, over the next few months?
Yeah, look, it's a forecast of iron ore is a bit of a fool's game. A lot of people have called it very wrong in the past. However, we wouldn't be as bearish as the others in the market. The consensus call is for the iron ore price to weaken further over a number of years. But I think that there is further stimulus to come, as China does have that 5% GDP target. So I wouldn't be too surprised to see further monetary policy easing and potentially even some fiscal stimulus to support these measures announced over the last coming weeks.
Yeah, and you look at the price of iron ore futures right now at $110 US a tonne. Obviously, in the federal budget, Treasury have got modelling at iron ore falling to about 65 a tonne. So we're literally at double. We're basically at double that right now. What does it sort of mean for federal budget forecast when iron ore is this strong?
Obviously, the iron ore price, double the budget forecast will continue to help surprise on the upside and forward budget announcements, as we've seen today with today's budget surplus announcement. Iron ore is a massive contributor to the Australia's economy, and particularly WA's.
And what about oil? Let's just shift to that briefly. I mean, how's that been tracking recently?
Yeah, oil's been weakening off, and a lot of that's to do with the China weakness. It has a small bounce. We've seen Saudi Arabia come out and they've given up on their US $100 mark. No real surprise with Brent trading at $72 a barrel. We have seen concerns in the Middle East around supply disruptions. With the Israel, Gaza, and now Lebanon conflicts. However, we're yet to see any fundamental shift in production from that conflict. So usually it's just short-term pricing movements on that. Interesting to note that net oil shorts hit a 20-year high. So it would be a very interesting market to see if there was a true supply disruption, if there was to be further stimulus announced in China, which is the largest oil importer in the world.
So in other words, the market thinks the price of oil could actually drop even more.
Correct. The financial positions in on the global markets is for the oil price to trade down from here. But generally, when you have everyone thinking the same direction, quite often you'll see the opposite happens. And we've seen that with the iron ore in the last decade or so.
Michael Scantlebury, thanks for your time.
Thank you, Ed. Good to be with you.